You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
It's Mining Stock Education. I'm Bill Powers, and my friend David Erfle joins me today. He just arrived back at his home in California from the Beaver Creek Precious Metals Summit in beautiful Beaver Creek, Colorado, up in the mountains. Dave, you go there and you meet with all the CEOs and executives of the company you invest in. Also see a lot of colleagues in the space. And so we'll just jump right into it. Tell us about sentiment in the sector as you kind of gleaned from the CEOs and got the sentiment also from investors when you were there, please.
Yeah, it was on the dour side, Bill. It depends on which management team you talk to. If you're talking to a management team that doesn't have a lot of cash in the bank, and the market sees that they're probably going to have to go to the market hat in hand, their share price is suffering even more than others. And they're not too happy. They're frustrated. But if you talk to management teams of companies that have done the right things as far as capital preservation, as far as raising money at the right time when their stock price was higher, and they've done a good job of conserving capital while this has been happening, and the market sees that they don't need to raise capital anytime soon. They're upbeat. They're very positive about the future of their project. So it all depends on who I talk to. But I talked to a lot. I had almost 25 meetings. So it's speed dating with miners. You got 25 minutes to talk to them, and as you said, the setting is beautiful, but it's high altitude, and if you have a meeting scheduled from one end of the conference to the other, and you have to rush to get there and go upstairs, you get there and you're kind of out of breath, and it's kind of challenging. But it was the first conference I'd been to in a couple of years, so I was very excited to attend. It was great to catch up with colleagues and friends, and it was too bad I didn't see you there, but it was nice. But it's kind of best of times and worst of times for the sector. Best of times if you got a lot of cash in and you're looking for deals, you got plenty of time to sharpen your pencil and do a lot of due diligence before you invest your money. So it's interesting what's happening right now.
So I wasn't at Beaver Creek, as you said, but I have been talking to the CEOs of companies I invest in. And to your point, it's kind of a double-edged sword. I said, okay, what are we going to do? Are you going to take the little money that you have and try to create a catalyst, drill some holes? And then part of the response from some of them, Dave, is like, well, even if I do that, Bill, I don't even think the market's going to reward me. So the struggle is it even wise to spend a little money to advance the project if it's not going to even help the share price to raise money at a higher point in the future? So they're kind of between a rock and a hard place. Anything more you could add on that, Dave?
Absolutely. The few exploration plays that I have, I cut off. I sold all my earlier stage exploration companies a long time ago, but I still have a couple that are more exploration driven. They do have defined deposits, but they're more exploration driven, and they've cut down their exploration considerably. They cut down their drill rigs, but they did raise money. And they do have enough cash for the next 12 months. But I understand what they're going through. I mean, even if you have success at the drill bit and you release those results at this point right now, in the sector, those news releases are being used as liquidity events to be sold for tax loss. So, even bonanza grade results, even if they are rewarded right away, you see the pop come off pretty quickly as investors that are waiting for a higher share price to sell for tax loss come in and sell, because right now, everybody's worried about that Maginot Line in gold, which is that 1675 price. Everybody's focused on that. So it's basically the difference between gold price remaining in a bull market or morphing into a bear market, and that's what everybody's focus is on.
And so the level you're looking at is about that 1675. I had a technician on the show recently. He's looking at about 1500 to 1450. He thinks gold will get down there before it really begins to take off. However, at the same time, he's very bullish on silver. When silver dipped below 18, he said he thinks that's the bottom. I'm speaking of Nick Santiago for my faithful listeners. Your thoughts on those comments, Dave?
Yeah, I mean, but I have a hard time seeing the silver price going higher and the gold price going lower at the same time. I have a hard time seeing a situation like that. But anything's possible in this market, in this sector. But yes, what you're seeing right now that is bullish is the silver price showing strong relative strength to the gold price, and also the miners showing relative strength to not only the gold price but the stock market. Today and Friday, you're seeing a decoupling of the mining sector from the stock market. That's not a trend yet. That's just 2 days. As we head into the Fed decision in a few days here. But I don't know if you read my article from last Friday. I talked about the 7-year gold stock bottoming cycle, which is a very interesting thing to get into, because when you had the secular bull market begin in the year 2001, it started at a double bottom of 250, and the gold stocks were at a major low. And 7 years later, they made another major low in 2008 during the global financial crisis. And then 7 years later, in late 2015, they made another major low. And in 2015 is an interesting time to bring up, because that's kind of like what it feels like right now. This feels like not only the attitude but the technical situation and what we were waiting for in 2015. When I was at the Beaver Creek conference in September 2015, the mining sector was in the process of making a 6-month accumulative bottom. Of course, at that time we didn't know that, but the GDX had gone down 85%. After the HUI had gone up 1,600% in a decade. So it was a brutal bear market, and everybody was focused on the Fed hiking rates for the first time since they went to zero in global financial crisis. And $1,000 level was the level, right? Because that was basically the 50% retracement from the just below $1,000 was a 50% retracement from the 1925 high that it had made in 2011. So we were all waiting for that to happen. Of course, it never happened. Gold bottomed at 1045, and then a month later, the shorts the shorts that had cleaned up for the past 4 years in mining stocks started to cover it, and started a huge bull move in the GDX and the GDXJ, and you had many juniors go up 10, 15 times in just 6 months. So we're kind of we're in a sentiment situation like that. We're in a technical situation like that in the gold market. But right now, for the gold price, it's 1675. That's the line everybody's looking at, which is a 38% retracement from the August high after the doubling of the gold price in 4 years. So that's what everybody's looking at. 1675. I can't find an analyst that is not predicting the gold price is going to break this line. And just like in late 2015, we've got a very overcrowded bearish boat. And on the flip side of that right now, we have a very overcrowded bullish boat in the dollar index, which is showing negative divergence in the RSI as the dollar continues to go higher. It's extremely overbought, and you've got everybody and his brother saying the dollar is going to keep going higher, while you've got everybody and his brother saying the gold price is going to keep going lower. In the meantime, we've got that 7-year gold stock cycle in the background. So it's 7 years later, it's 2022. But the thing is we just don't know where it's going to bottom if this 7-year cycle plays out again this year. I think it's really close right now, and the trigger could be the Fed here on Wednesday. We could very easily see a buy the news type of situation, because everybody's waiting for this sword of Damocles, this move below 1675. And I did an interview with Kitco at the conference the day gold traded below 1675 and started to run those stops, but all the selling was absorbed. It did not close the day below 1675. It did not close the week below 1675. Obviously, it's waiting for a catalyst for that to happen. And that catalyst could be the Fed to either break it or have a huge short covering.
And the Fed would break it with a 100 basis point rise. Would that be something?
So, but that's not even close to being priced in. So that would be a huge surprise to the market, which the Fed does not want to do. The S&P 500 just broke critical support at 3,900. It's still trading below there. That's a lower low. So I would not, I think you would have to see a full basis point rate hike, at least 50 to 60% priced in before they'd even consider it. And it's about 18% priced in right now, as far as the CME Fed Watch is concerned. So I don't see that happening. But of course, everybody keys on what the Fed says after they hike rates. So let's say they hike the 75 basis point rate hike. It's probably not going to move the market much. They're going to be waiting to see what Powell has to say 30 minutes later during the press conference. That's what's going to move the market.
And so mining stocks, do you expect them to head upwards in anticipation of the pivot, the dovish move of the Fed, perhaps Q1 next year? Is that one of the possibilities that you're anticipating?
It depends on I think a lot depends on stock market's reaction, because let's face it, the Fed's basically raising rates in a recession right now. That's never happened before. As much as the White House, changes the definition of recession, as far as I'm concerned, we're still in a recession. We are already in the beginnings of a recession. So if the Q3, GDP comes out negative, that's 3 consecutive quarters. 2 consecutive quarters is already historically, technically considered we're in a recession. So if the stock market, if the S&P 500 gets down to 3,200, and that's critical support. If the S&P 500 loses critical support at 3,200, then I would see the Fed's going to have to at least stop raising rates, and then start job loading about a pivot in the future. Because that's what the Fed does. They go really far in both directions before something breaks, and then they start doing damage control. So, Powell basically came out and said that, we're going to destroy demand, because we're going to keep raising rates. We have to get the inflation down. And they think that raising rates is going to get the inflation down. That's politically what they need to do, because if they don't do that, it doesn't look like they're trying to fight inflation, but it's not working. And, because the inflation is going up and for reasons that they can't control, these supply chain issues, these huge Chinese cities, the 21 million population city, is in lockdown right now. So you can't lock down.
I think the politicians are creating false scarcity though, Dave, like with energy and things like that though.
Absolutely. But you can't lock down all these economies and then start them back up again and expect everything to go smoothly. So all the money creation and all of the supply chain issues is creating all this inflation, and the Fed can't do anything about that.
So if you get a new potential junior mining stock investor, you're talking to them in light of this macro situation and where we're at, we think in the cycle, what would be your advice? Avoid, buy GDXJ alone?
If you're new to this sector, it's a great time to start accumulating, but you have to make sure that you're accumulating the right stocks. It's a stock picker's market here because, like I said, it's a lot like 2015, late 2015. And what we were waiting for in 2015 was consolidation to take place. And it really never happened. We had that pop and all these crappy companies got financed along with the good ones. So, that was another buzzword at the conference. This time was consolidation. We need to see consolidation. There's been some companies that have merged, but we haven't seen enough of that. We've seen a few companies go bankrupt, but we haven't seen a lot. There's still too many lifestyle juniors in this sector, and too many juniors that are close to other juniors. They need to merge, right? But it's a lot of it's egos, and it's a lot of it's they continue to do these finances to keep the lights on. So be very wary of that. If you see a company raising $1 million or $500,000 or something, that's something you want to avoid, because that's just a keep the lights on raise. You want to avoid that. So the good news is we did see, we saw a few bought deals at the conference. There hasn't been a lot of bought deals recently. I think there was maybe one in July, none in August. So we had two while we were at the conference. We had Marathon Gold do a bought deal, and then Skeena Resources do a bought deal. Full disclosure, I'm a shareholder of both. But it's tough out there to raise money. It's pretty tight. And usually we see right after these two conferences in Colorado, the Beaver Creek conference followed by the Denver Gold Forum, which is taking place right now, you start to see some M&A activity. But I don't know if we're going to see much this time, because the share prices are just too low.
Do you think sometimes the junior mining CEOs believe they're so undervalued that they're resistant when the majors or the mid-tiers want meetings with them at these conferences, right? I wouldn't want to sell at these levels if I were the CEO.
I don't know about what meetings, but a lot of them will talk to anybody, but they'll be hesitant. They're like, no, I'm not selling at this price. Personally, they're thinking, I've got my skin in the game, and my average cost is not much higher or lower than the share price is right now. And if they come in with a 50%, offer, of course I have to take it to the board. I have to present it to the shareholder. Personally, I wouldn't want to sell at that price. So I'm going to do everything to dissuade them not to take it. That's what they're thinking. That's always the first question I ask, right? When I talk to these management teams, how much skin in the game do you have, and what's your average cost? I want to make sure that they are aligned with me, just like I do in my newsletter. I do the same thing. I'm not gonna promote a stock that I don't own myself, and I'm going to give you an opportunity to get in at the same time I do, because I'll tell you about it before I get into it, so we can kind of all try to get into it at the same price. So I want to be just like I want my subscribers to be, me to be fully aligned with my subscribers. I want management team to be fully aligned with me if I'm going to get into their stock. And a lot of them, they've paid more than what the share price is trading at right now. So you can be sure that they're very mindful of dilution. There's started to be some creative financings coming up. We had one while the conference was taking place. West Haven Gold was exploring up in BC, in the bottom of the Golden Triangle. They sold a 2% NSR to Franco, Nevada, to cash up at a non-dilutive finance, and they only took $6 million for it. And then Franco also bought another $1 million Canadian of shares at the same time.
Now, my sponsor, Torque Resources, did you see that one? Goldfields came in with $15 million at a 23% premium. That's the kind of financing you want at a depressed level,
exactly. Right? As long as they're not giving too much of the project away. Yes.
Yeah.
Yes, absolutely. And that's another thing you want to ask. You're depressed here. If you get an offer from a major for 19.9%, would you do it here? They're like, no, I don't want to give away that much of my project. I'll do a 9.9% maybe, right? I'll take, I'll sell 9.9% of the project price, but not 20%.
Yeah.
So it's a very interesting time here, because, like I said, it feels a lot like late 2015, but in late 2015, nobody had cash.
Mm-hmm.
Right? There's plenty of companies now that still have a lot of cash, because there was quite a lot of cash raised in 2020 and 2021 and early this year.
Dave, I know some management teams give themselves a pay cut when we get into situations such as we're facing here. Was that a question you asked CEOs when you had 25 meetings? Like, hey, are you cutting your own salary here until things turn around?
Yes.
Okay.
Yes. And there was one company I talked to where they're not getting paid at all.
So, are they telling the market that, besides you asking?
I haven't seen where they're telling the market that. When these guys have 15, 20, 25%, own 15, 20, 25% of the company, they're doing everything they can. Make sure that when they have to raise money, it's not going to be, it's not going to kill their share price.
They're running it like owners, not managers, right?
Exactly. And that's that's the companies you want to be in. You know, you've got the opportunity here to make sure to do the proper due diligence to find out that, and take some money that you're not afraid to lose and put it in a company like that. And if the sector has another pop, like the last 4 times the GDX to S&P ratio was trading down at this level, the GDX to S&P ratio is now trading down at a level that created a bottom in late 2015, in 2018, in March 2020. It's at the same level right now. And after each time it reached this level, we had a multi-month move in the sector that saw a lot of these juniors go up 10, 15 times. So it's just a good time to have patience, have faith, and have cash. And by all means, don't use margin in this sector at all. I mean, a lot of people are learning a lesson. If they use margin, the past few years to get into this sector, they're not feeling very well.
Dave Lotan, a strategic investor who's been on the show, he basically says junior mining stocks are inherently a call option. So you don't need more margin, right? They are a call option.
Absolutely. And that goes the same if you're high net worth investor and you're considering getting into a private placement. It's like most of these companies are trading at perpetual warrant share prices. So why take the extra risk and getting into a private placement if a lot of these shares are already trading at these low prices? As far as a U.S. investor, that's how I feel, because how draconian they made these rules for us U.S. investors for private placement. So I'm out of the private placement business for the time being until I start to see the sector turn around.
Dave, one more question before you go. So you had these 25 or so meetings. You don't have to name names unless you want to, but for the sake of learning, could you share with my audience, what were some of the reasons that would have caused you to sell a position within your portfolio after you exited a meeting with a company, just for the sake of learning? Okay.
Well, the company, they're getting low on cash. And if I ask them what are their options on raising cash, if it's another dilutive finance after their share price has taken a 75% haircut, that's something I would sell. But if it's maybe a bridge loan from a high net worth, high profile investor that I know is paid has an average cost of more than where the share price is now, a situation like that, I'd say, okay, that makes sense. So yeah, I mean, it's company specific, a question like that. I mean, it could be something going on in the jurisdiction.
And it's the intangibles too that you take away from the meeting too, right?
Yeah, absolutely. Absolutely. Yeah. That's why it's such, it's so important to not just talk to these management teams on Zoom calls. If you have the chance to go to a conference and have a one-on-one meeting with them, that's even better. Especially if you run into them at a reception, and they've had a few drinks in them. Maybe you can get a little more information that you were able to get in the meeting. So it's always nice to be in person in these meetings at these conferences.
Yep. Well, David's website is juniorminerjunkiewithay.com. He's a professional investor and one of my key mentors over the last 7 years. So, David, thanks for the update on the Beaver Creek Conference and how you're managing your portfolio and seeing the sector. I really appreciate your insights.
Absolutely. Always a pleasure. And hopefully in a month, it'll be a little more bullish for us. Huh?
Definitely. We'll be touching base in a month.